My portfolio took a major hit this week, and after only 3 months of being out of margin jail, I'm right back in it. Stay tuned and I'll show you the details. I'm on the hunt for an infinite stream of dividend income, and it begins with my plan to turn $1,000 of Robinhood's money into $1,000 of my money. And as always, remember, none of this is financial, legal, or tax advice. You've got to do your own research for your investments. Before I get to the bad news, I want to thank everyone who subscribed to the channel. I started this over the summer and it's already up to almost 2.6 thousand subscribers, and I really appreciate every one of you. It's great to know there are people out there interested in this content, and each subscriber is motivation to keep it going, so I really do appreciate it. So how did I get here? Well, I used about $2,000 of my money to purchase a foundation fund, which I chose as PAAA. I'm a Robinhood Gold member, which gives me an interest-free $1,000 margin loan. I used that loan to buy $250 of Misty, SPYI, Koi, and Nivi. Since that time, I sold Misty due to its poor performance and purchased HOOW. I'm reinvesting half of the dividends back into these funds, and the other half of the dividends are going to my forever fund, SPYI. The plan is to build up my SPYI position to $1,000 and then pay off the loan, which would effectively give me $1,000 of free money, earning passive income for the rest of my life. But things have not gone smoothly. About 3 months ago, my account balance fell below $2,000, which put me at risk of a margin call. I had miscalculated the way that Robinhood determines my equity in the account, and in turn, how they determine when I reach that $2,000 margin minimum. In order to fix the situation, I had to add 2 shares of PAAA to my account, giving me additional buffer room. And over the last 3 months, my account has actually done pretty well most of the time. The value has risen periodically above the 5% buffer threshold that put me into the low risk margin category. But everything has changed over the past couple of weeks. As you can see, because my account value has dropped below $2,000 in equity, I now have an account deficit, and Robinhood has essentially frozen what I can do with my account until I resolve this. My account dropped significantly this week, down 3.5%. Of course, it's a little misleading because PAAA is the vast majority of this account, and it's my rock solid foundation. It was actually up a fraction of a percent this week. So all of this loss is concentrated on the 4 ultra high yield ETFs that went down dramatically. So let's take a look at where we are in each of these positions. Nivi for the week was down about almost 7%. Its current stock price is $20.55, and my average is $26.66, which is actually not bad compared to some of the others. We switch over and look at SPYI. For the week, it was down 9.5%. $13.40 is the current price. My average cost was $16.40. So from a share price perspective, it's doing the best. Koi had a bad week, down 18%. Current share price of $23.38. And this is brutal. My average cost is $56.86. So it's down half, and that's with half of my dividends reinvested. Finally, we have HOOW, which I just recently purchased after selling out of Misty. And of course, it went down for the week over 15%. It's about $50 per share. And I purchased in at $68 per share. And this is only about 2 or 3 weeks ago. So here's what everything looks like put together. Overall, the account is down over 21%. The Koi position down dramatically, and the WHO, formerly Misty position, is down even worse. So if you add up the losses from my 4 high-yield ETF positions, I'm down over $334. And that's offset by the SPYI position that is pure profit at $121, leaving me about $213 in the red. So even though my PAAA value is over $2,200, it's offset by that negative $213, which is why my Robinhood investing total is below $2,000. Now these numbers don't match up exactly, because my spreadsheet isn't as updated as Robinhood is, especially considering non-standard trading hours. So at the moment that this episode was taped, I'm $3.61 below my $2,000 margin minimum, and I have two choices on how I can address this. The first option is to do nothing and hope that on Monday the stock market improves and my position values increase and bring me back over the $2,000 threshold. The other option is to add funds to the account. What I did last time when this happened was I added 2 shares of PAAA, and together those are worth about $100. I will likely do the same thing. I own PAAA in another account on Robinhood, so I can simply transfer 2 shares in, which would add about $100 more of buffer. The last time this happened, Robinhood didn't take action on the margin call immediately. I believe I may have waited 2 days to see if the market would recover, and it didn't before I transferred my additional shares in. So that's probably what I'll do in this case. But I really can't do anything until I resolve this account deficit. Even if I do transfer those shares in, I'm really banking on the fact that these shares can recover. KOI, for example, has just been doing terribly, down 18% for the week, 35% for the month, 40% for the 3 months. But what gives me hope is looking at this year-to-date graph. KOI's first trading day was in February of 2025, and as you can see, the market tanked down all the way to the April Liberation Day issues. But as you can see, it was able to rebound and recover and go to all-time highs in July, which coincidentally is about when I bought in. So my hope is that KOI and WHO in particular can rebound from these depths, recover the share price, and salvage this. The way those funds are set up, they do not have a capped upside, unlike a lot of covered call funds. The structure of these round hill funds is fundamentally different. So in theory, they can regain all of this share value. And for this experiment to work, that's absolutely got to happen. HOOW hasn't been around as long. Let's take a look at its chart. It didn't start until June, so it missed Liberation Day. So we don't have that comparison. But the structure of the fund is the same as KOI. So again, I'm banking on the fact that this is going to be able to rebound. So what about my dividends for the week? Nivy paid me 42.5 cents per share, which works out to about 103% annualized rate, and it continues the pattern of really settling into this zone. So I don't really have any complaints with Nivy. KOI's distribution dropped a good bit, down to about 32.5 cents per share, which represents about a 66% return rate. Unfortunately, due to the declining account value, that only led to a $1.58 distribution. So when I split it in half, I wasn't able to reinvest the dividend back into KOI because I need at least $1 to reinvest. So I set that amount aside and will add it to the distribution I get next week from KOI. I'm in the exact same situation with WHO. I received about 70 cents per share, which is almost half of last week's distribution. And that only works out to a 60-something% annualized rate. And since the dollar amount of my investment is so low, when I split it in half, I was stuck with 73 cents left over that I'll have to combine with next week's WHO distribution before I can reinvest it. I was able to combine and invest in my SPYI position from these 3 distributions. I received the SNOI distribution Friday night at about 14.5 cents per share, which only works out to about a 52% annualized rate. I haven't had an opportunity to reinvest those dividends yet. Unfortunately, 3 out of my 4 ultra-high yield ETFs only yielded annualized returns of 50 to 70%, which is below what I want to see. If there's a silver lining to this week, it's been the performance of PAAA. It's been doing exactly what I needed it to do, remaining steady during rough waters. So let me know in the comments, do you think I should go ahead and add a couple more shares to PAAA and continue moving on? Or do you think I should wait it out and see if the stock prices recover to get me out of this margin deficit? And if you found this breakdown helpful or entertaining, please hit the like button and subscribe for future updates. And remember, none of this is financial, legal, or tax advice. I'm just inviting you along my journey. And if you'd like to learn more about my small account margin strategy, check out the first 5 videos in this series. And good luck hunting those infinite dividends. Take care.